Sinha, we were wanting to look at markets also. Now, it's actually interesting. If you see what's happening to the stock market, look at the stock market abroad, it's like America's at a new all-time high. So no one quite knows what the American stock markets are doing right now, largely driven by tech. That's the other way, that you use animal spirits, you use the markets, you put in flexibilities, maybe I was discussing with Mr. Sanyal, cut capital gains tax, do something like that to revive animal spirits, and then leave it to the market after that to try and solve a lot of these problems. What's your take, sir, on the present situation?
Coming specifically to the markets, the interesting thing which is happening in India, even outside India, is that the huge amount of liquidity which has been pumped in globally, both by the central banks and by the fiscal stimuli that has been given, it's a huge amount. The guess is that it is about $16-17 trillion. So what is happening, that this huge amount of liquidity is finding a place to go. For India, for example, in the first quarter ending March, our market between January and end of March declined by about 35%. But in April to June, in the previous 3 months, ending yesterday, 30th of June, our market has gained 25% from that level on 1st of April. Look at the foreign portfolio investors. Both on the debt and the equity side, we had a huge outflow in the first 3 months, but that has also now become positive. In fact, about $4 billion, I was looking at the figures still yesterday, $4 billion positive inflow in the last 3 months. So there is a realization, not only in India, but globally, that the financial markets have become completely disconnected with the economic reality. And I'm not saying this. Even the IMF in its report 3 days back has said that the financial markets are hoping that this sort of a liquidity pumping will continue, and because of this, the interest rates will continue to be suppressed, and because of this, the financial asset prices will continue to rise. But there is a big risk in it. The risk is that this cannot go on forever, and whenever that risk appetite gets reduced or challenged, then there will be a very heavy price to pay. So right now in the financial markets, we are seeing that the market is disconnected from the economic reality. However, I must also add that the Reserve Bank of India, in our case, did a very good job on 27th of March and again on 17th of April, when they came out with their monetary policy and other announcements, and that was the time when it was required. Going back by making a comparison to the 2008 episode, the financial markets were facing a very serious problem, and the bond market, both government bond market and the corporate bond market, was giving signals. So that handling by the RBI was very, very timely. It was very, very effective. But the point is, how much can the central bank do? And where does the government of the day start taking measures? I'll stop here.
You can do a crystal ball, next 5-6 months, how do you see them going, and any final policy prescriptions that you might have?
Going by our preparedness and also past history, I would recommend that the area where we should concentrate right now is the area of infrastructure. It is time tested, because if government takes the right decisions, this whole thing can be kicked in the next 2 weeks. Anything else that we are talking about will require maybe a couple of months or even more. So, and fortunately, most of the infrastructure related activity has to start with the government's initiative. I would say a very big and immediate focus on infrastructure. Here, unfortunately, there are a number of supply side related issues which the government will have to solve. If you talk to any company in the area of infrastructure, they will say what all hurdles they are facing even today, even in projects which have been approved. They can't get their goods, they can't get their raw materials, they can't get their manpower equipment. Those things should not be very difficult for the government to remove. So my focus would be on infrastructure, and for last 20 years at least, whenever India has been in a crisis, the immediate revival has started to focus on infrastructure. So I would recommend that. Second would be real estate. My take is that there is tremendous amount of shortage of residential space in the country. And again here, lot of regulatory and other supply side issues should be removed. If they can be done, this sector can take up. And what happens both in infrastructure and real estate is that once things start moving, steel, cement, lot of other activities, they all start moving. And lastly, I would say that government and the banking system should look very, very closely at the MSME sector. Which of them are in a position to survive? Which of them can grow very fast? Which of them can further increase their capacity and meet demands?